All right, folks, the next unit is adjustments. Now, we place adjustments on something called the worksheet. And basically, the worksheet's the accountant's rough work. So, if we were in class, I'd let you do it in pencil. And basically, we prepare the worksheet to so that we can get accurate data before we prepare the financial statements. Up until this point, all our financial statements have been wrong. And I'll give you an example. Let's suppose we start with $400 worth of supplies at the beginning of the fiscal period. Okay? At the end of the fiscal period, that doesn't necessarily mean we have $400 worth of supplies left because we probably use some up. Now, up until this point, we haven't been accounting for stuff that we've used up over the course of the fiscal period. And what the worksheet's going to allow us to do is to make those figures more accurate or reflect the fact that stuff's getting used up. All right, now, the worksheet doesn't become part of the accounting data. It's not like a balance sheet or an income statement. It's simply like I said, the accountant's rough work, and it's going to make sure that everything balances before the financial statements are prepared. Now, on this particular note, you'll see, okay, it says when using the worksheet, an accountant transfers the final account balances from each of the ledger accounts into the trial balance section of the worksheet. Later, these figures are transferred to either the income statement section or the balance sheet section of the worksheet. Okay, now, you'll understand this paragraph a little bit more when we get through an example of a worksheet. So don't panic yet, okay? An example's coming your way. All right, so starting now, not only are you going to have to worry about the actual accounts that are debited and credited, you're actually going to have to worry about the numbers, okay, because you're going to be calculating the numbers as well. All right, so the purpose of adjustments, okay, is to ensure that the accounts are as accurate as they can be before financial statements are prepared, like I said. So the accounts that have to be adjusted before these financial statements are prepared include supplies, so we're going to adjust supplies, something called prepaid expenses, and fixed assets that depreciate or lose value. Now, prepaid expenses are expenses that we've paid in advance, okay? So they're considered assets, and the reason why is they have value until we use them up. It's still our money until we actually use the prepaid expense up. Now, once the prepaid expense has been used up, it's going to become an expense. So prepaid rent will become rent expense once it's used up. Now, this change from expense or prepaid expense to expense occurs regularly. So as the fiscal period goes on, okay, it's going to be happening. All right, so let's do an example. On January 1st, okay, ABC Incorporated prepaid 3 months worth of insurance, okay? The insurance costs $1,700 a month. So we're talking about 3 months or $5,100, right? So what entry would be made to record this purchase? Now, we're just recording the purchase of the insurance right now. Okay? So on January 1st, we're going to debit prepaid insurance, okay, for $5,100, and we're going to credit cash for $5,100, okay? Now, this isn't an adjustment. This is just the purchase of the prepaid insurance. So this doesn't affect any expenses since none of the insurance has been used up yet. Now let's skip forward. Let's assume that our fiscal period's 1 month, right? So at the end of January comes, how much of that 3 months that we prepaid got used up? 1 month's worth, right? So we're going to have to debit insurance expense because it's been used up now, and we're going to credit the asset account prepaid insurance because now we no longer have the money. We've used up that insurance, right? So in regards to adjustments, the adjustments are always going to be, the debit and the credit are always going to be the same. So if it's prepaid insurance, it's going to be insurance expense debited, prepaid insurance credited. If we're talking about prepaid rent, it would be rent expense debited and prepaid rent credited, right? So you're going to have to memorize the debit and the credit. Okay. Next one is supplies, and we went over an example. Now, supplies have to be adjusted because some of the supplies are used up. Okay. So let's assume that we find that $60 worth of supplies have been used up over January. So at the end of January, we have to make an adjustment. So supplies expense is going to be debited $60, okay, because we used it up, and supplies is going to be credited. Now that adjustment is always going to be the same again, right? So whenever we make a supplies adjustment, supplies expense is debited, supplies credited. You're just going to have to memorize it. All right, I'm going to stop here because depreciation takes a little bit of time to explain. So I'm going to make another video on depreciation.